Hello, everyone. Welcome to a Wall Street per Main Street podcast. And today's special guest is Dan Collins. He is the founder and editor of the China Money Report. Dan has been a guest on our podcast in the past, and today he's generous enough to come back and to give us an update of what's going on in the Asian market, especially what's going on in China. So, Dan, thank you for joining us.
Hey, Mo, thanks. Glad to be back.
Okay, great. I want to start off this podcast talking about China and the economy. I just want to get your general thought about the Chinese economy. There's a lot of talk out there about the Chinese economy being over-leveraged or taking on too much debt. What are your thoughts on that and your thoughts on the economy in general?
Sure. The Chinese economy in general, I think we need to step back and look where we've come from. So from 1980 to today, the Chinese economy has grown 25 times. The GDP last year came in at 9.4 trillion. By far the world's second largest economy. My opinion, and there was news out this week as well that China has passed the United States already on a purchasing power parity basis. I believe that's the case. China produces more energy than the United States. They produce 3 times as many vehicles as the United States does. China produces more steel in 6 weeks than the United States produces all year. So China's really the economic juggernaut. It's it's real GDP. It's not debt, credit, and financial engineering, which the United States economy has become. So I believe the GDP, and I've talked about this on your show and other shows, American GDP, I believe, is a bubble. I believe they're doing anything, printing as much money as they can just to keep it where it's at, and it's not going to move any higher. But that's the overall scope of the Chinese economy. Recently, there's a lot of talk on debt. The problem I think with the media is in China, the people that talk about China are finance people, and the financial system in China is closed off to Western speculation. So they really don't know anything. They don't live there. They don't speak the language. They don't have a real broad understanding of China. So are there problems? Yes, there's problems in every economy. There's local government debt problems. Anywhere basically the government has intervened. So there's too much capacity in renewable energy. That's a problem. That's government driven. So they have their problems, but at the end of the day, I'm going to take China over the United States. China has a workforce of 700 million people. The United States has 86 million full-time private sector workers. So, over 7, 8, 9 times the number the United States does. Highest education standard in the world now in Shanghai and China. And people work for a living. It's a real GDP as opposed to the United States. So there's problems, but I think the problems are less than what the United States has.
And you talk about the GDP in the United States, which the last quarter only grew 0.1%. And according to an article I read last week, if it wasn't for Obamacare, the GDP would actually be in the negatives. That's how bad the economy in the U.S. is compared to China.
Yeah, it's shocking. If you look at real indicators in the United States, you look at where I came from originally, which was out of the automotive industry. People focus on sales; they don't focus on production. So, United States last year, they got back up to about 16 million vehicles sold every year, but we're only producing 7 million. And of those 7 million we're producing, most of the parts now are becoming imported. So we've gone from year 2000 we produced 13 million cars. So we've gone from a production number of 13 million down to 7 million. That's somehow economic growth, but of course, GDP doesn't count that. The United States is the only country in the world that when a Korean car company comes to the United States and just puts the tires on the car, the United States counts that as $20,000 or $30,000 local manufacturing. So they don't separate the value add, which all the other countries have done on their GDP. And that's why the U.S. consumption numbers, which is driven by debt, has propped up the American GDP. But in reality, it's a paper tiger.
Right, and the problem with the United States economy is that they so focus on the demand side, like the sales, like you mentioned. They're not focused on the supply side with production. The production is what's going to bring jobs. The demand does not actually create that many jobs compared to the production part. If you produce, that means there's capital in the economy, people are saving their money, and then people are starting business, and that will create jobs. But United States, the politicians want to focus on creating demand because they think demand will create more jobs.
That's a great point. And it's absolutely right. Like if you look at a vehicle assembly plant, that will create 300 jobs, but all those parts that go into the vehicle, that's 10,000 jobs. And that's where all the jobs are. It's not being taken by automation. I've been in engineering for 15 years now. There's no brand new robots working on the lines. Labor is alive and well. It's just labor is not in the United States anymore. It's in China and Mexico and India and other places. But yeah, until we get back to production, focusing on a real economy, I'm afraid the jobs are never going to be around.
Now, you just mentioned robots. One of my questions I had for you is, are you a believer that automation and robotics will replace many jobs in the manufacturing industry in China? Because I know Foxconn is looking to replace a lot of their workers with robotics.
Yeah, Foxconn, I believe, is going to order about 1 million robots. They have a big automation project, and that's because wages in China are up about 200% in the last 5-6 years. So there is labor out there. There is wage growth. It's just not in the United States. In terms of automation, to get if you look in the field of robotics, there's actually, if you look in these manufacturing plants, the only thing that are really out there are welding robots. There's, in terms of assembly, there's not that much automation going on. And if you look at what robots can do today, it's actually very limited. People thought their jobs would get replaced. It turns out the very simple things that people can do, like construction or janitorial work, these things are almost impossible to be automated. While at the same time, some white collar work is possible to automate, like accounting or tax services. So I believe that technology is it is growing and it will lift living standards, but it is often used as the scapegoat for why all of our jobs in the United States are gone. But it's not the case. The real culprit is Asian countries gaming the free trade system against us.
And also, in the United States, we have union problem, and there's a lot of regulation, high taxation. So year after year, the U.S. government is making it unfriendly to do any business here.
Oh, yeah, absolutely. We have highest corporate tax rate in the world, yet we collect no taxes.
Right. Yeah. Even a top corporation don't even pay taxes.
No, they don't pay that. And we tax at the very root of our tax system is we tax labor, we tax production. And guess what? Oh, it all left. Oh, never saw that coming. So until we go back and get rid of the income tax, or at least lower it to maybe say a flat rate, and then try to get taxes from a consumption, which they won't do because that'll hurt demand, and the whole financial engineering system lives on a knife edge of demand. But we have to get to a consumption tax. Most of the countries in the world realize that, and they've had that implemented for 15, 20 years now. The U.S. we still live off a tax system that was designed 80, 90 years ago.
And you also mentioned that the Chinese can create more steel more efficiently than the U.S. And one of the reasons why is that I don't think China has to deal with a big union that we have to deal with here in the United States, do they?
No, they have unions, but the unions are very focused on very basic things. They're not nothing like the U.S. unions that are really exist for the sole purpose of overpaying the people for what they do at their job.
Right. Okay. So shifting gears here and talking about the real estate market in the United States, as you may have heard, the Chinese are #1 buyers of real estate in New York City. They overtook the Russians. And now I wanted to get your thoughts on that. Why are the Chinese buying real estate in the U.S. rather than China? Do they believe the real estate market here is cheaper than over there in China?
Oh, there's a couple of reasons. The first of which is many of these same people that buy properties overseas already have 2, 3, or 4 properties in China. That's the first one. The second one, and there's rules now in China against buying multiple properties. So there's no mortgages available for a second property. You have to be actually a city resident to buy there now. So there's a lot of clampdown on buying properties in China. That's been in place for 3 or 4 years now. Why they go overseas, it's also driven by a lot of people, diversifying their assets. why they need to diversify their assets. Everybody knows in China it's a very corrupt society. There's a lot of people that have made money, with basically bribing government officials and getting things done, behind the, going around systems to get business done, which is what they used to have to do under communism, and they're very good at it. So a lot of people are diversify their resources, and it's really a way of getting your money out of the country in case anything happens to you domestically in China.
And that's a great point. And also, I saw a video on CNBC about Chinese buying real estate on the West Coast, and a lot of them do it because they want to send their kids to college in the United States. So they buy real estate in the United States, and they move here, and they live there.
Sure, they'll come over, they'll buy a house for the sole purpose of sending the kid over. And you buy the house, you get the in-state tuition. So they'll buy it over, send the kid over, and a lot of times they'll send their wife over, and then they'll come back to China to keep working. And then a lot of government officials have been doing that, low-level government officials. It's called going naked. They get towards the end of their career, they're afraid when they're out of power, one of their entanglements, so to speak, are going to be discovered. So they get the kid over first and start sending money out of the country that way, and then send the wife, and then eventually they have a place to flee. I don't know if you read too, Mo, that there's been over 50 reported suicides of Chinese government officials in this year alone, and that's because of the anti-corruption drive that's going on across China.
I did hear about that, and I've been hearing about a lot of suicide reports on Wall Street and in China as well. A lot of people are jumping off buildings for God knows what reason, but most likely related to corruption, or they're about to go to jail.
Yep.
So you briefly talked about inflation in China, and you mentioned that the wages in China have been going up 200% in the past few years. So let's talk about the inflation in China. How bad is inflation there? If you go to the grocery store, you go out to eat, do you see a noticeable change in the purchasing power of your currency?
Yeah, the funny thing is now everything in China is more than the United States. So clothes, food, the price of some vegetables in China are up 40 times in 10 years. Official inflation was running 6-7%. Government really got worried about it. That's why they've clamped down on the housing market, the car market. There's quotas now to buy a car. So if you want to buy a car in Shanghai, you first pay a $10,000 license fee plate, and you have to win the license plate in a lottery type thing. So government's done a lot to clamp down on inflation. It's still probably really unofficially 6 or 7%. It's too much. That's also wages have been rising at this point to keep up with it. So it hasn't been totally devastating like inflation normally is. But it has been really bad, and China really has to clamp down on it because it can, inflation, if anything, can destroy economy really fast. It's inflation.
And unfortunately, they peg their currency to the U.S. dollar. So anytime the U.S. or the Federal Reserve print money, they have to print money as well.
Absolutely.
So the U.S. exports the inflation to China.
Yeah, absolutely. That's a main driver of it. And, it's hard to imagine, but these Asian countries are still going off this old model, not just China, Japan, China, Korea. Every time their industry starts to suffer, they smash their currency down. I mean, and it's getting to the point ridiculous. If you look at what Japan's doing now, Japan has a QE program twice the size of the United States, and they're only a third the size in GDP terms of the United States. So I think Japan's going to be the first one that just rolls over into total hyperinflation, and you watch their entire economy melt down.
I agree there. I think Kyle Bass, the hedge fund manager, said the same thing, that Japan will be the first one to go down in the currency wars.
Yep.
And so are you surprised that the Chinese central bank are still playing along this currency war by printing money whenever the Federal Reserve are printing money? Do you see any tension going on between the central bank in China and the U.S.?
Well, they've gone along with it to a degree. So the RMB has appreciated about 20 to 25% the last 5-6 years. China has stopped buying U.S. Treasuries since 2009. So when we went into about 2008, 2009, they're about 1.2 trillion. Today they're about 1.3 trillion. I mean, and since that time, Chinese currency reserves have gone up about $2 or $3 trillion. That money's gone into other real assets. It's gone into gold. It's gone into state-owned enterprises to go by foreign rivals. It's gone into buying and stocking iron ore and coal and everything else. What their plan is, they're going around and signing agreements with central banks all over the world. Bank of Malaysia is holding renminbi as a reserve. Bank of Nigeria is holding renminbi as a reserve. France and China have signed to swap currencies directly. So China is preparing the renminbi to eventually become a new reserve currency. They're changing their foreign trade into renminbi as opposed to U.S. dollars. Russian oil contracts are now in renminbi instead of dollars to China. So China's other suppliers, Angola, Sudan, we know these guys will go to renminbi anytime China wants them to. So I think China's about to turn off the U.S. dollar spigot, and we'll watch the renminbi fill the vacuum that's being created by the Federal Reserve and the extreme monetization of the U.S. dollar.
Yeah, it's interesting that China demand for gold has skyrocketed ever since the big drop we had in gold from 1900 to all the way to almost 1200. And during that time, in 2013, China imported almost the whole annual mining supply for gold. A lot of people out there are predicting that they're doing this to position themselves to become the next world reserve currency.
Yeah, absolutely. The gold. They're about to 2014. They're going to announce what their gold holdings are. They do that once every 5 years. I'm predicting they'll be about 5,000 tons, up from 1,000 tons. So they'll be one of the top, probably the second largest gold holder behind the U.S. Behind the U.S. That's assuming the U.S. actually still has any in Fort Knox. But China will be number 2, and absolutely they'll keep buying gold because it's a real asset. And who knows, someday when that renminbi they may back it partially by gold, and that'll help vault it to the next world reserve currency.
And the countries are already operating outside the U.S. World Reserve currency and the petrodollar system. We've seen Iran and Russia doing deals using other currencies. I believe China and India and other BRIC countries are already using other currencies to do transactions. So the trend we're seeing now is that a lot of countries are starting to abandon the dollar.
Yeah, absolutely. China's foreign trade is expected to go 50% into renminbi by 2015. That's next year. That's up from 0% 3 years ago. So once they get that trade into renminbi and the oil contracts get into RMB, the U.S., which is a good thing, has all the shale oil revolution. We're no longer going to be importing oil as much. We're down from 14 trillion barrels a day to like 4 trillion or something a year. And then, so our international import demand for the United States has collapsed. While at the same time, Chinese import demand has skyrocketed. China is the world's largest oil importer now. So the whole system of the petrodollar is under threat from the petro yuan, which I wrote about in an article a few years back. Once all the oil contracts are flowing in yuan, it's going to be difficult for the United States to justify global protection of the sea lanes to make sure Saudi oil gets to China when U.S. is not going to be using those sea lanes anymore for oil imports. So it's going to be interesting dynamic when the RMB, which is backed by China, world's largest economy, world's largest creditor nation, world's largest trading nation, when they supplant the dollar, I see that happening within 5 years.
Do you see a time where China completely stopped buying U.S. Treasury?
Well, I think it's already happened. As I mentioned, if you look at their net increase is very, very minimal. So I think they're under direction. They're trying to hold their currency relatively stable. China doesn't believe in doing anything quick and rash. So to keep it stable, they still have to buy treasuries, but it hasn't increased in 4 or 5 years. I don't think it will go over 1.5 trillion. They're at about 1.3 trillion today. So I think they're already, And that's clear. The Federal Reserve is the buyer in the market today of treasuries. They've been buying 80 to 90% of them. The only ones they don't buy, they get the Bank of Japan to buy. So you look at Belgium, just became the third largest holder of treasuries. Nobody knows who really is behind that trade. It's probably the Federal Reserve. It's definitely not China, because China would forecast that they're buying them because there's no reason for them to hide it. So, yeah, I mean, I don't see them buying any more treasuries. I see the treasury market. The treasury have monetized the dollar to such an extent that I think the world's going to walk away from it as soon as there's a viable alternative, which is going to be the renminbi. That's on the way.
And that's a great point. And then I want to talk about one more topic, then we go to our last topic, which is the Asian pivot. And there's a lot of listeners out there that's interested in investing in Chinese stocks. Now, the problem with that is a lot of the Chinese companies out there, their financial statements are a lot of red flags, and because they don't follow the gap that the U.S. companies here follow. So what tip or advice do you give to investors out there that want to buy Chinese stocks?
Well, generally, I didn't recommend people buy Chinese stocks. Just for the point you mentioned, you could buy the very large companies. The Alibabas, the Weibos. These guys will work. But basically, the U.S. has this reverse IPO system in place, where a lot of the junk and the scam companies from China came over to the United States to list. The only reason they get a much higher multiple in Hong Kong or mainland China. Why would they go to the United States to list? The only, okay, there's a little prestige involved with a U.S. listing, but the real reason is that these companies have fake financial statements and fake earnings. So I advise people to stay away from Chinese stocks. We recommended some Chinese stocks in our China Money Report model portfolio, but those are companies that we know. And if you don't know the company and it's from China, stay away, because they've been a lot of the junk has come over to the United States to list. If you tried that in Hong Kong and had fake financials, someone would come along and break your kneecaps. But in the United States, they can get away with it.
Right. Yep. We let corporations get away with a lot of stuff here, unfortunately. So for the listeners out there that want to invest in Chinese stocks, just be very careful, because the financial statement may look real good, but if you dig deeper, a lot of red flags. So be aware. So the last topic before we let you go is before we started this podcast, you told me about the Asian pivot. Now, could you tell our listeners what that means and what the implication of this to the U.S. economy and China?
Sure. The Asian pivot is basically a new diplomatic strategy coming out of the United States, focused around military and economics. So what they're trying to do after 12 fruitless years of wars in the Middle East is now they're going to pivot the military assets over to Asia. And that's really to confront China. They'll tell you, oh, we're not confronting China, but obviously actions speak louder than words. They're moving 60% of their naval assets to Asia. They're moving 60% of the Air Force bases outside the United States to Asia. We're going around signing military treaties. Philippines, we just signed. We're going to have access to Philippine bases we haven't had in decades. We're going to have troops there within a few years. Look out for that. That's not announced, but I'm sure that'll happen. We got 1,000 Marines now in Darwin, Australia, and that's on the way to 2,500. So Darwin's going to be be a fallback position for the United States. We've moved naval assets to Singapore. We're going to try to bottle up the Straits of Malacca. That's where a quarter of the world's oil flows from the Middle East to China. So we're trying to work with Singapore, Malaysia, Vietnam, Philippines, in the South China Sea to bottle up China there. And then in the East China Sea, we're going to have Japan remilitarized. And this is the first. They just increased their military budget faster than they have done in 34 years. So you can expect, as Gerald Celente likes to say, when everything else fails, they take you to war. Well, that's what the Japanese politicians are going to do, because before they collapse, you can be sure they're going to nationalize and remilitarize. So basically, it's a strategy of trying to confront China. The problem is, as I like to say, you're not going to confront China militarily. You got to confront them economically. You don't win the battle for prosperity for your citizens by putting troops in Darwin, Australia. You win it by rebuilding Detroit. So once we get back to worrying about our own domestic economy and our own cities, many which look like second and third world countries now, once we focus on ourselves, I think things will get much better.
And what you just described there is what Tim Rickett called the financial warfare, where they're putting boots on the ground and fighting other countries. They use stock market or the currency to try to destroy another country's prosperity and wealth. And that's what we're might see in the future.
Oh yeah, absolutely. And I think China's wary of that. That's why they've kept their currency pretty bottled up, and they've kept their domestic. There's not much speculation in the Chinese economy. Nobody's gonna short it, or nobody's gonna short all the companies in China. So it's a real domestic economy, production-based economy. So I think on the currency war standpoint, there's not much they can do. So they're going to try to go by militarily. And when we confront China, we're also confronting our banker and also our main supplier of consumer goods. So it's really a suicide superpower showdown, and it's real. But really, it's going to be the next cash cow for the military-industrial complex. When you hear them talk about it, they get really giddy about it because finally there's a credible superpower that the military can justify taking one out of every 2 tax dollars that come into the government.
Yeah, and a lot of people here in the U.S. are complaining about currency manipulation in China when, the Federal Reserve are manipulating the U.S. dollar for the past 100 years.
Yeah, absolutely, yeah.
That's an interesting point. People should definitely keep an eye out for the Asian pivots. I'm sure they're trying to keep an eye out on Russia as well, especially what's happened in the past couple of months in Ukraine.
Yeah, that's going to be a real volatile situation. You had Western-backed NGOs helping to support the overthrow of a democratically elected government. Now, they were an oligarchy. They're not a government. They were Russia-friendly, but these guys were overthrew a democratically elected government with AK-47s. There should be new elections, but they're not. Instantly the West put in our own guy as the head of the central bank. Hint, hint. We get control of the currency. You control the country. We've got control of the central bank, and Russia took Crimea. Crimea voted to become a Russia, and you basically got a civil war now. And we're meddling in places. It's been admitted in a lot of sites now that I think the FBI and CIA have 25 or 50 personnel now in Ukraine, trying to manage the government. We're having Senate and congressional hearings on the Ukraine, what we're going to do, Meanwhile, the only border in the world we don't protect is our own. Our own cities are collapsing. You look at Detroit's, Memphis's, Buffalo. I mean, these aren't nice places anymore. And until these morons start to focus on America again, we're just going to keep getting ourselves deeper and deeper into foreign complications, which our original founders said we need to keep wary of, because if you keep getting involved in everyone else's business, you're always busy in their business and not our own business.
Right, and Detroit's not the only city with a debt problem. If you look at L.A., Chicago, New York City, they're in the same hole as Detroit. So if you don't fix that problem, then our national security would be in big trouble.
Oh, absolutely.
Okay, Dan, well, thank you for your time. And people want to find out more about what you do. Where can they go?
Yeah, they can find me at thechinamoneyreport.com.
Okay, great. Well, thank you for coming on, and hope we can come back on again soon.
Absolutely. Thanks, Mo. Appreciate it.